If you're still manually marking structure, it's costing you time and your entries aren't precise. That's why you need to stop drawing now. You're getting the instant fix for 100% precision on structure and imbalances. I'll show you the manual method first, then we'll transition to the automatic fix. By the way, for those of you who follow my structure method, we've built something new that's going to make your charting a whole lot easier. I'll show you more about it later in this video. We're going to do this on the pound US dollar. I'm going to start here on a daily time frame, work you through the exact method of marking that correct market structure. But I'm going to show you the reason why this can take a lot of time and affect the actual trades you can capture because it takes too much time, the speed you need with marking your structure. But first, let's go through and I'll teach you the concept that I teach everybody, the right way to mark your structure step by step as we go through this chart. And then I'll show you how long it's taken us through this video to mark this. And then afterwards, later, so keep watching for later, you'll see how you'll be able to do this at a push of a button. So let's look at this area of price. We can identify where the market's been going sideways. We're going to start from this high here in the market. I'm going to mark this across and I'll mark this off as a BOS on a daily. The reason this is a break of structure on a daily is because when we're using this structure method, I'm going to use the arrows here to demonstrate this. We're looking for a candle to close down below the previous candle's low. This will create a valid high in this condition. Then when we see the market pushing up and we see a valid breakthrough on this candle, and I'll mark that candle off, when this candle here closes through that level, and it must be that body candle close, let's go in closer to this section while I just walk you through this. You must see this candle, body candle closing through this previous structure high. Then we look back, and because we're in a bullish scenario here, and I'll go through a bearish one later, we look back for the last time we see that close down. Now that actually happens to be this candle I've marked off. That's why I've marked it already. It's going to create a valid low. But from this point, we're not going to mark this as a valid low down here because we've got the candles wicking through. We still need to mark off the lowest point. Now, if price had gone straight up from here and broke through, and this was the lowest low, then that's fine, we mark it. But as we go lower here, this will become your low in the market. So I'm going to mark it off. Let's mark it off as a current low. Let me just turn on the magnet so we can make sure these levels snap up. And we're going to mark this off as a current. And go through here, we'll have a current daily low. We'll add this to the right. So we have a current low in the market. Let's make this a bit bigger as well because it's quite small, that text. Okay, so that's a daily low in the market. And as price continues to push higher, we're going to look for the same condition. Because we're in a bullish market, you're looking for that close down. So once we see the close down, which is on this candle here, we can then grab this line and we can make a duplication of it. And this is going to become our current high in the market. So again, it's cool having this magnet turned on because when I now go across, say, bring it to this, it's going to snap to that level and give us this area. And then we can go in, I can change this to a current daily high. So we've got our current daily high, our current daily low, and our previous daily break of structure. What this now gives you, and I'll show you from this high in the market to this low, is what we class as a current range in the market. It's our current daily bullish range. Now, this is the easiest way to understand marking the structure, but where it comes time consuming is when we have to mark it across the charts of all time frames, and especially when you're just going through your pairs, this can take a lot of time. But we'll go through now and I'll show you how you follow this structure from this point. And what I'll do later is we'll go into a replay mode and I'll show you how it works with the replay mode as well. So from this point in the market, you can see this low, we only wick through that low. We never take this high at that point. And eventually this low gets removed and you see this body candle closes through. That becomes a valid break of structure, reading that. So what we can now do is we can mark off a new low from here to here. And that's only true if from the left here, we have to double check, is we see this is a break of structure. This then breaks back bearish. Then we break bullish. This is a pullback. We have a break bullish. This is a low. We break bearish. then we go bullish, and we bearish again. So this is correct. And you can quickly do this back testing like this, but again, you've still got to mark out those charts, and it does take time to visually look at this and read those candlesticks. This is a method was done by a candle by candle approach. But let's now continue. What we've now got is prices basically bearish. We're looking for a close up now because we've shifted structure. This remains our current low in the market, but we're waiting for a close up like this. So we see this candle closes above this candle's high. That validates this low as a low in the market. And when it comes to our current high, this is going to be our current high, and I'll go through why. This is our current high, because again, when we see this breakout, we're looking back for the last time we see the close up. Not when we see the close down this time. In a bullish market, it was closed down. In a bearish market, we're looking for that close up. So now we've got our current structure. And you can see how long this is taking to just mark this out at the moment. You know, going through this step by step, it takes time, especially if you're new to this and you do struggle with seeing those structures on the chart. Let's get rid of these arrows now. So now we've got a bearish market in play. And then we're going to look at this section where we do break out. Now, before going any further, if you find this yourself that it does take time and you find you get a lot of mistakes when you're marking your structure this way, do share that in the comments. It's great to know if it's affecting you right now, and it does affect your potential trades and the quality of trades you take. So just drop that down below in a comment and let me know. So right here, we've got this as a new break of structure because we see this candle closing through. So we're going to remove this and we're going to add a new break of structure here. So we have a new BOS to the upside. So again, we have a bullish market. When we see this breakout, we've gone back bullish. So what did we look for previously? We're looking for a close down. And this candle is going to be our current close down in the market. So this is our current close down. That means we'll mark off this low here. Let's grab this level. Becomes our new low in the market. Now, eventually we can see that we break out again here, but we'll come back to that in a moment. So when we see the next close down, because we're in a bullish market, we can mark off that high. So this becomes our new high. And there's our current daily high. So you can start to see where the market's gone from a bullish, bearish, bullish market there. And we come back and we sweep this low, we have a pullback and price is coming into near of imbalance here. Now, again, imbalances in the market, that is another subject which can take a lot of time to mark out. Now, when I'm talking about imbalances, what I'm talking about is marking off this zone here, which is an area of leftover imbalance. This leftover area is our leftover imbalance. The way we look at that, we look at where we have the previous low to the previous high. That is our space between, which has not yet been filled. That's why we see price comes back, holds that imbalance, then drops the downside. That's something you're going to learn again later in this video, how you can speed that up and find those areas instantly on your chart. So now we have the reversal again, where we have a nice close to downside here. So we're going to remove this and add a new level. Okay, so we got a new breaker structure to the downside. We shifted yet again. So now we're bearish again. What are we looking for? But when we see the breakout, we look back again now for that last close up, which is going to be this candle there. And this now becomes your new high. So we have a new high in the market. Then we're looking for the close up again after the breakout, which is going to be this one. And that gives me my new low in the market. So let's mark this one off. So now you have your current low, current daily high. What does that give you? Well, hopefully you've been paying attention. It gives you your current range in the market, where you're looking for price to potentially pull back to continue lower. But we could just continue higher and shift structure to the upside. So that is how you're basically going to be marking that structure. And you can see just this area of price is taking us some time to do that, especially if you're looking at even doing your back testing. Especially with looking at back testing, you'd have to go through and draw all of these levels up, mainly going through, find them on your chart. If you're thinking, there's no way I can do all of this every day, you're exactly right. That's why I built something that does this entire process instantly. I'll show you that right now. This is the Structure Companion tool. It automatically maps every key swing, confirms your trend direction, and keeps your higher time frame structure perfectly aligned as you move down to your entries. No guessing, no redrawing, no wasted time. Watch this. I'll start on the daily and show you how it locks in structure instantly. Then we'll drop down and find the trade together. Let's go through it now so you can see how it works in real time. So let's play this forward. We'll go forward from where we are. We're looking for the break. You can see as soon as we see that breakout, the new high is plotted for strong high. Now we don't have a valid low yet, so we'll go through step by step here. Now we're going to have a valid low. So as soon as this candle closes and next one opens, this would actually turn to a solid line for you. So there we go. We go to next position. You can see as soon as that one opened, we went to solid line. So just showing you that's how it's going to work in real time. But now we're going to go back to here. I'm going to drop down a time frame and I'll go through and show you how you could actually use this to help you take potential trade entries. So at this point in time, you can see that the structure on this 4-hour time frame is currently bearish. So we've got a strong high and a weak low in the market. Let's just play this forward a bit. And now we've gone bearish to the market again. New break of structure. As soon as we saw this closing through, we create this new valid high and a new weak low in the market. So a strong high and weak low. Now the indicator is going to show you if we shift bullish to see if we could close through. So we've wicked through at the moment. We're holding. Now we've got an imbalance here. It's going to indicate to you there's potential imbalance. So this could hold price to push price higher in the market, which helps you to start reading the candles in the market. And there we have. That's where we see price holding and then with nice big push to the upside. So not only is it going to help you to see structure clearly, quickly, very fast on your charts, it's going to help you to read where potential areas price are going to hold. So now we continue forward. Now we've got a potential new break of structure to the upside here on the 4-hour time frame. We've got a potential high forming. We don't have it formed yet. And we've got a strong low down here, giving you a nice area of demand. And this leftover imbalance where price held. Now, when this candle closes, I'm going to mark this out for you. There's a leftover imbalance right here. If we now drop down to a 30-minute time frame, you see everything is being aligned again. Now, what we can actually do is if I go into this one and turn this one on, it's going to show you now my 4-hour levels as well. So not only does it have a use, this indicator, to show you what's currently on the current time frame, we've also made it so you can add more than one indicator, and it's going to help you now to see your higher time frame. So you can see what's going on your 4-hour as well as your 30-minute here. So let me show you now. We've got this current break to the upside. Okay, previous break to the upside on the 4-hour. A break now to the upside after this bearish push to the downside. Now we're looking for a new break again to the upside. Let's see if we break out. Waiting for the next break of structure. Okay, so we've just broken to the upside again. And the market has continued to break higher. So now you can start to see how the market is continuing to push higher. Now what I've just done here as well is we've got a nice area of potential demand here. So we mark this out as an area of demand. Now, understanding demand and supply zones is crucial when you're looking to take trades. You need to understand this. So let's keep going. And we can see where the imbalances have been marked left over here as well. So what we've got now is a valid high being created. Now the reason this 4-hour is still dashed because we don't have a valid high yet on the 4-hour. But what we're reading here now is our current 30-minute. We've got a nice bullish movement in the market. We continue to be bullish. We're having a nice swing pullback here. We've got some leftover imbalance where price is often going to be pulled towards. So this is going to show you this all already on the chart. So as soon as you open your chart up at this point, you're going to be able to see that you're in a bullish trend on the 4-hour. You're on a bullish trend here on a 30-minute. We have an area of demand, prices pulling back towards. Let's continue down. And you can see where we've got the bearish imbalances being created on the way down. Price is going to want to pull back into those to drop into the area of potential demand. We're basically dropping into this imbalance as well. What we're looking for, and that's the start of a potential internal structure. But now what we see, and this is great because we're now seeing price pushing into this area of demand. What we're looking for is we've seen a sweep of these lows here in the market, is price to continue up to run for this week high on the 30-minute. Why? Because we are bullish with this 30-minute trend. We're still bullish on the 4-hour. What we're going to do now, we're going to drop down to 3-minute time frame. And I'm going to turn on the other indicator. That's now going to show you the 30-minute. Okay, so we're on a 3-minute time frame. Our 30-minute week high is up here, so we can now see this is our 30-minute strong low. This is our current 30-minute demand, our current swing on 30-minute. We're pulling back in. Now we're reading multiple time frames using this indicator. That's how the structure companion tool is designed to work, to help you to understand multiple time frames. So what we're looking for here is the market to shift. We want to see that we've come out of this area, we start to shift structure. It is important to understand is that this indicator is also going to show you when we have a trend forming in the market. Once we see it turning solid, now first is going to go a dashed line to show you it's a first reversal. Once you see the solid line, it's a continuation of that trend, and that's when you want to be jumping in the market. Let me just play this forward a bit. Let's take this out. We know we're coming out of a strong low now in the market, and we're looking for price to either continue lower or push up. So now we've pushed up. We can see that the market has pushed the upside. Where did the price come into first? What do you see here? This is your old imbalance candle. Price pushed into that imbalance, and we've really broken structure. That is why the market came back into this area and then pushed higher. This imbalance held price. Now we've got a shift. What we're looking for now for an entry is the market to show us the next break of structure, to leave an area of demand to take a buy, because we're looking for the continuation of that trend. Let's see if we can see this. So now we get the solid level breaking. This gives me a nice area of demand that I'd mark out here to take a buy from. And we'll be looking for an entry from that area of demand. We can look for a pullback towards this area. First target, potentially at the week high here on the 3-minute. And then you're looking for your potential final target at that 30-minute. You don't need to go for that first target. You can just go for that final target of the 30-minute. You can see how the indicator has provided all this information for you. It's giving you a clear insight of what's happening. We know we're bullish on this 30-minute time frame coming out of 30-minute demand. You know you've got the bullish bias on a 3-minute coming out of this 30-minute demand, going back in line with our 30-minute time frame. If we shrink back even more, we can identify this is our 4-hour break of structure and low down here, and we're with the current trend on the 4-hour as well. When everything aligns, the indicator will show you this and provide the information you need to instantly know the fix you need to be able to take trades with confidence, have more clarity in your trading, and to help you succeed where you may be already failing. Let's now just play this forward on this 3-minute time frame. There we go. We've been triggered into that trade, straight push up, a new break of structure again, and we're looking for price to run for that high. And there we go. We hit the full high. We're not looking for massive profits. We're looking for potential targets that are going to work for you. And that was your target based on this. We saw the shift of structure, entered to run for that 30-minute week high. So that's the structure companion tool, the shortcut that removes all the manual markup and gives you verified structure instantly. Right now, only 50 copies are available at the 50% launch price. And once they're gone, this offer closes. You can grab yours today using the link in the description. Don't miss out. But if you want to further more educate yourself with structure and how this companion tool can help you, check out this video popping up now. It's going to take you through step by step on multiple time frames applying this tool to the charts.